very good morning to one and all present here. So welcome to another session of Ask Me Anything. So today for the session, we have with us Mr. Vaitheeswaran, who is a corporate and a tax lawyer with 28 years of experience in advisory and tax litigation. He is an author of various books on taxation, a speaker on GST, international taxation, company law, and artificial intelligence. He is an active writer and publishes various articles in print and digital medias. He is also an active blogger on humor. Mr. Vaitheeswaran is also a charter member of TiE Chennai. So today the topic that will be addressed is on GST income tax issues on account of COVID-19 and force majeure. To moderate the session, we have with us Mrs. Aparna Ram Mohan, MD of Sri Sattva Group, who is also an active charter member of TiE Chennai. Now I request Mrs. Aparna to take over the session. Thank you.
Good morning, everyone. Good morning, Vaidhi sir.
Good morning.
It's a pleasure to be in a conversation with you.
Same here.
For our audience, Mr. Vaitheeswaran is also my guru for indirect tax, and it's a pleasure to be speaking to him. So, Saurav has already introduced our key speaker for the day, and to add it all, he has a lot of laurels of victorious cases, not just at High Court level, but also at Supreme Court level. And I will definitely probe into a conversation with him, asking on various cases. So before we start our day, is there something specific that you would want our SME friends to know about from a GST perspective?
See, hi Aparna, and thanks TiE for arranging this, and good morning friends. GST is now 3 years old, and we are getting into some kind of acceptance of that. Initially, I think many of the SMEs had a lot of reservations in the way GST was administered. But if you look at it from what was the law before and then look at GST, then you'll probably realize that GST is a phenomenal reform, not only from a tax perspective, but also from a business perspective. Just to take you back in terms of time, in the pre-GST era, that is prior to July 2017, we had multiple indirect taxes. We had excise duty, we had a countervailing duty, we had service tax, we had VAT, we had CST, we had entry tax. In fact, in a very, if you have to put it in a very simple example, if I'm manufacturing, let us say, this microphone, the manufacturing aspect would attract an excise duty. When I sell the microphone, the selling would attract sales tax or VAT. When that microphone enters into another state, the entry aspect attracted entry tax. If the microphone had to be serviced, the service aspect had service tax. So for one single microphone kind of a transaction, every aspect of it was taxed. And not only was it taxed differently by the center and the state. Consequently, what we had this issue of overlap. Mind-boggling issues as to what is goods, what is service. In a restaurant, is it supply of food or is it supply of service? In a construction contract, is it supply of goods or is it supply of service? How much is goods, how much is service? Who should tax what? How much should center tax, how much should state tax? Each law had its own complex legislation, it had its rules, it had its notification. Every businessman was forever engaged in complying with multiple tax laws. And the worst of all these things was what is known as the cascading effect. Across products, we had nearly a 36 to 37% incidence of indirect taxes because of the cascading effect. Excise duty would be levied, and then on that, VAT would be levied. Like that, you had this cascading effect of tax. So if you're a retail outlet, you could not take credit of your AMC service tax. So you had all kinds of issues. And therefore, from 36 to 37%, if you have walked down to 18% with credits, then it makes a huge difference in terms of what is known as the reform aspect of GST, the beneficial aspect of GST, both from a fiscal perspective as well as from a tax perspective. So from an SME perspective, where do they stand? SMEs were probably reluctantly dragged into the whole system, in the sense that they had to depend upon their buyers, the bigger buyers or the medium level buyers. And the medium level buyers and the bigger buyers were very simple, that in the GST system, we would like to buy from you, we'd like to engage you, provided you are registered, provided you comply with the law, provided you raise an invoice, provided you charge the tax, provided you pay the tax. So all kinds of conditions, some of them are difficult conditions, we'll discuss that a bit later, but all kinds of conditions were imposed, whereby SMEs were dragged into an era of compliance thanks to the bigger companies who are in the supply chain.
Sir, from a SME perspective, of course, you're right. They were dragged into it, but then now they are left with very less choice. They have to embrace SME, they have to embrace GST. And again, from an embracing perspective, the kind of conversations that we've had with GST reveals that they're still not sure if GST is something which is benefiting them. While as professionals, we understand that GST is really done away with a lot of unclaimed tax, which was going as a cost, which was actually adding up on our product cost or service cost. But now with GST coming in, there is so much that the SMEs can benefit. But even after 3 years of implementation, there's a lot of hesitation in accepting it. Some words for them. And sir, I think your voice is not very audible. So if camera and mic can be accordingly adjusted.
Yeah. I'll just switch off the AC. That should be better in terms of clarity. Going back to your point.
Again, needs to focus on your face. My apologies.
Yeah. Going back to your point with reference to whether they really benefited out of GST, mixed answers. Within SMEs, there are two kinds, if I might have to classify it for the purpose of the discussion. The first kind of SME is of some person who was already in trouble. When I say trouble in the sense, cash flow was a challenge, working capital was a huge challenge, procuring raw materials was always a big issue, and delivery challenges were always there because of cash flow and working capital issues. And for those kind of SME entities, when GST required that you raise an invoice and you pay GST upfront and then wait for a realization from the customer, that was almost a death blow. Because what happened was, if the customer is in a position to clear the bills at the earliest, or if he's the micro enterprise legislation is applicable and is able to realize these monies and pay it, then it is fine. But if that is not happening, then what happens is that there's a huge cash flow pressure for the supplier SME, and this continues every month after a point of time. Then there is stagnation, then there is delays, there is defaults, and all those things happen. This is the first kind. The second kind of SMEs is that they were not in such a bad position. Their cash flows were well managed. Their working capital planning was good. Their procurement was good. They were in a good cycle, and they were supplying to companies who are also honoring the payments, but their customers went into trouble. Many of them were in the automobile sector, and many of them belong to the auto component sector. And when the automobile sector went for a 6, and all kinds of pressures mounted on the automobile sector, the auto component sector also faced the music, and consequently the job workers and the suppliers and the entire back-end supply chain also got affected. So even a good SME, which had a decent cash flow planning and could actually go forward and could actually benefit out of GST, could not really translate that benefit in terms of profitability because of a market cycle which has happened. So it was quite unfortunate that this economic recession which hit this industry hit at a point of time when people are actually getting used to GST.
Understood. So from that benefit perspective, again, one another question which often lingers among SMEs is about the export refund, sir. If you could throw a little light on how SMEs can really claim the export refund on time, and from your experience, have you really seen the companies get the refund on time?
See, let me be a little legal in this, even though it might be slightly technical to the audience. Let us imagine a situation that you're a manufacturer and you're exporting goods. Now, when the goods leave the country, the law talks about two things. you pay what is called as an IGST on the exports and come back and seek the refund of the IGST paid on the exports. This is one scenario. The second scenario is that you export your goods without payment of GST by executing a letter of undertaking where you commit that you will export this by a particular framework. And then because you have exported, you come back to the government and seek a refund of your input tax credit. Now, many companies looked at the second option because there is no cash outflow. You're exporting without payment of GST and you're able to encash your input tax credit refunds. So it was well envisaged, well structured. And even the law was very good in the sense that it said without any verification, 90% of the input tax credit refund claims should be granted. So somewhere down the line, what really happened was, I think initially there was this challenges in terms of technology, in terms of filings, in terms of portal and stuff like that. And subsequently, the mechanism got it right and exports refunds were happening. And it was not as if it was not happening. Then came the challenge that when the money was coming as refunds, the government also felt that their cash flows were getting affected. So ஒழுங்கா வந்த எக்ஸ்போர்ட் திடீர்னு குறைய ஆரம்பிச்சிருச்சு. இந்த ரீஃபண்ட் வந்து ரொம்ப முக்கியமான ஒரு கேஷ் ஃப்ளோ. அந்த ரீஃபண்ட் வந்து அது இருந்தாதான் அடுத்த ப்ராடக்ட் சைக்கிள் எஸ்எம்இயால மேனுஃபேக்சர் பண்ண முடியும். அந்த மாதிரி ஒரு ரீஃபண்டை கவர்மெண்ட் ஷுட் ஹவ் டேக்கன் ஆல் எஃபர்ட்ஸ் டு கிவ் இட். அண்ட் ஏதோ ஒரு காரணத்தாலேயோ இல்லை ரெவென்யூ டார்கெட்ஸ் காரணத்தாலேயோ இல்லாத போலாத காரணங்களுக்காக இது உங்களுக்கு கிடையாது சொல்லி நோட்டீஸ் கொடுக்க ஆரம்பிச்சாங்க. அந்த நோட்டீஸ் கொடுக்க ஆரம்பிச்ச ஸ்டேஜ்ல பிரச்சனை ஆரம்பிச்சது. பிகாஸ் இஃப் யூ அந்த ரீஃபண்ட் வராட்டி அடுத்த ஒர்க்கிங் கேபிட்டல் ப்ராப்ளம், அடுத்த ரா மெட்டீரியல் ப்ராப்ளம், அடுத்த ஷிஃப்ட் ப்ராப்ளம், அடுத்த லேபருக்கு சம்பளம் கொடுக்கறது ப்ராப்ளம். ஸோ அரசாங்கம் வந்து இதை வேற மாதிரி எடுத்துட்டு போயிருக்கணும். அரசாங்கம் என்ன யோசிச்சிருக்கோம்னா எக்காரணத்துக்கு கொண்டும் எக்ஸ்போர்ட் ரீஃபண்ட் நிறுத்தப்படாதுன்னு எடுத்துருந்தாங்க. இதுல என்ன ஆச்சுன்னா சில பேர் ஃப்ராட் பண்ண ஆரம்பிச்சாங்க. இப்போ நம்ம நாட்டிலே எடுத்துட்டீங்கன்னா ஒரு 100 பேர் ஒரு பிசினஸ் பண்றாங்கன்னா அதுல 10 பேர் ஃப்ராடா இருக்கிற வாய்ப்பு இருக்கு. அந்த 10 பேர் ஃப்ராடா இருக்கிறதுனால என்ன ஆகும், மீதி 90 பேருக்கு கெட்ட பேர் வரும். இந்த 10 பேர் ஃப்ராடை வந்து அரசாங்கம் வந்து அடக்கணும் உடக்கணுங்கிற எண்ணத்துல போயிட்டு 100 பேருக்கு கஷ்டமான ஒரு லாவை கொடுத்துடுறாங்க. I'll give you a simple example. In the exporter situationல if the issue came up like this, some people were doubtful exporters. So அரசாங்கத்துக்கு ஒரு டவுட் வந்தது, இவங்கெல்லாம் சந்தேகத்துக்கு உட்பட்ட எக்ஸ்போர்ட்டர்ஸ். ஸோ ஒரு லிஸ்ட் போட்டுட்டாங்க. அந்த லிஸ்ட் போட்டு என்ன பண்ணாங்க, டிபார்ட்மெண்ட்ல ஒரு இன்ஸ்ட்ரக்ஷன் கொடுத்துட்டு இந்த எக்ஸ்போர்ட்டர்ஸ் எல்லாம் நிஜமாவே இங்க இருக்காங்களா, அங்க போய் பாருங்க, அவங்களுக்கு ஃபேக்டரி இருக்கா, அவங்களுக்கு பிசினஸ் இருக்கா, அவங்க பிஎஃப் கட்டுறாங்களா, அவங்க லேபர் கட்டுறாங்களா, ஆல் தட் எல்லாம் பாருங்க, அப்போதான் we can give a relief for that particular person சொன்ன ஆரம்பிச்சாங்க. அதோட நிறுத்தாம அவங்க இன்புட் டாக்ஸ் கிரெடிட் கரெக்டா கிளைம் பண்ணிருக்காங்களா, அவங்களோட ஜிஎஸ்டிஆர் 3Bயும் ஜிஎஸ்டிஆர் 2Aயும் மேட்ச் ஆகுதா, இதெல்லாம் when they started asking these questions, then even the bona fide exporters in that list could not meet some of the other requirements. There were genuine exporters who were also caught in this. So நம்பகத்தன்மை or trust factor, when the trust deficit happened from the government because of some exporters playing truant, the impact fell on the other exporters, which created a huge cash flow. And that is what we've been trying to say, that trust has to come back and government has to go a little more forward and then find other methods to trap the other frauds in the system.
So sir, again, while we are still at this, the fraud அப்படிங்கறச்சே நான் வந்து இன்னொரு question கேட்கிறேன் related. Many SMEs வந்து இந்த GST regime ஆரம்பிக்கிறதுக்கு முன்னாடி they were not properly maintaining books of accounts. ஒரு மாதிரி சிலது அக்கவுண்ட்ல போகும், சிலது வந்து கரெக்டா இருக்காது, அந்த லெவல்ல தான் மெயின்டைன் பண்ணிருந்தாங்க. But GST is definitely brought in a situation when everyone's maintaining books of accounts in a specific manner. At least to the extent GSTR 1 file பண்ணணுமா, அதுக்கு வந்து revenue records have to be proper, the related e-way bills. Again, credit claim பண்றதுக்கு it has to be proper record. So record keeping and bookkeeping has been streamlined. But still SMEs are of the opinion that many SMEs are of the opinion that this has really not helped them. But as professionals, we can see that many companies have grown because of this bookkeeping action. What is your opinion, sir? In the streamlining nala, has it improvised for them or has it been for worse?
I will give an example. In the pre-GST law, when central excise was there, or small scale industries were exemption. That is small industry now 1.5 crores turnover. if your turnover is under 1.5 crores, உங்களுக்கு excise duty கிடையாது. நீங்க excise கட்ட வேண்டாம், நீங்க records வச்சுக்க வேண்டாம், நீங்க registration பண்ண வேண்டாம்னு ஒரு சிஸ்டம் இருக்கு. எக்ஸைஸுக்கு பயந்தே many businesses did not grow. எனக்கே தெரியும் அவங்க வந்து கரெக்டா February மாசம் வந்து பில்லிங் நிறுத்திடுவாங்க. ஏன் சார் பில்லிங் நிறுத்துறீங்க? மார்க்கெட் இஸ் குட், பட் why don't you grow your business? நான் இல்ல we don't want to cross the 1.5 crores. 1.5 crore cross பண்ணா நான் ரெக்கார்ட்ஸ் வச்சுக்கணும், ரெஜிஸ்டர் பண்ணணும் சொல்லிட்டு they stunted their own growth because of the possibility of excise. And there are அதுக்கப்புறம் nefarious practices ஆரம்பிச்சு, ஒரே பேர்ல 4 பிசினஸ் இந்த விளையாட்டுலாம் ஆரம்பிச்சாங்க. But if you look at GST, everybody pays tax. There is no call, say 1.5 crores exemption. The threshold limit is very less. Therefore, everybody has come into the net. So, என்ன ஆகும்? நீங்க focus பண்ணி உங்க business பண்றதா இருந்தா, உங்களோட பிசினஸோட growth நீங்க ரெக்கார்ட் கீப்பிங்காகவோ இல்ல ஒரு டாக்ஸ்க்காகவோ குறைக்கிற வாய்ப்பு போயிடுச்சு. You will try to grow your business if there is an opportunity. If business opportunity is not there, that's a different question. But business opportunity இருந்தும் pre-GST era, people scaled down their business and stunted their growth because they didn't want to get to a system of record keeping. But by GST making everything equal, where every player coming into the same net in terms of threshold registration, it becomes equal in terms of competition. Opportunities also become equal, and therefore it becomes relevant that somebody would like to keep their books and records. And as a professional, I'll tell you, these are small efforts that you take. There is nothing wrong in having a healthy bookkeeping system. There is nothing wrong in having a good financial record system because that is good for you. You will grow. And as you scale up, as you grow in terms of business, or scale thandi, when you become from a small level to a little bit higher level and even further levels, you will look at investors walking into your businesses, looking at an opportunity. You will want money. You will want further money for growth. When you're looking at further money for growth, there are two ways. Either it is equity or debt. And if you're looking at equity and you're looking at investor coming in, an investor will always love a company which maintains proper books and records. There'll be, you will score top marks or in straight away in the first diligence itself when you have maintained that kind of records and that kind of records. And ரொம்ப பெரிய கஷ்டமான records இல்ல. Today there are enough professionals available who are doing this. There is enough software which takes care of it. There are very cheap softwares also in the market which helps you this. So it is actually a mindset. If you're able to get over that mindset that you have to get into a system of evasion, from that you move to a system where you enter into compliance and record keeping. Your business will grow and you will grow.
Sir, while you're saying this, we are aware that a lot of SMEs continue to find innovative ways of not discharging their GST liability. And there are really innovative ways they have managed to achieve it. But of course, this is not for long and this has penal repercussions. It will even end up, they might end up closing their business. Appadingra situation irkarche, of course, they are doing, I don't want to get into why they are doing, but is there some specific incidents or some specific points that you've seen in the past which you would like to share and you would like to warn them as to where they could lead with these kind of innovative ways of not discharging their liability?
See, I'm not the one who will ever endorse evasion or for that matter, a violation of law. I'm also aware of what you're talking about, that people, they may enter into certain practices which are not healthy. Suppression. Typically, there could be some kind of suppression of turnover. That is straight away trouble because the act is so worded, the act is so structured that the penal provisions are very strong. The prosecution provisions are equally strong. Pazhaya law would, in fact, இன்னும் stronger. Second, in a newspaper, you would have seen a lot of articles came up which said fake invoice racket. What is this fake invoice racket? But GST la miga mukkiyamaana oru vishayam enna input tax credit. Now, if I buy some goods or services, I am entitled to input tax credit of the GST charged by the supplier. And that I will take it as a credit and use it for payment of my GST, thereby saving cash flow. So now ஒரு வாங்குற பொருள்ல ஜிஎஸ்டி இருந்ததுன்னா அந்த ஜிஎஸ்டி நான் கிரெடிட் எடுத்துக்கலாம். ஸோ சில பேர் என்ன பண்ணாங்க, உங்களுக்கு இன்வாய்ஸ் தான் வேணும், நான் உங்களுக்கு இன்வாய்ஸ் ஜென்ரேட் பண்ணி தரேன், எனக்கு ஒரு ஸ்மால் பர்சன்டேஜ் கமிஷன் கொடுத்துருங்க. ஸோ சரக்கே அனுப்பாம without supplying the goods, there were fellows who supplied invoices. அந்த இன்வாய்ஸ் ஜிஎஸ்டி நம்பர் இருக்கும், அவர் ரெஜிஸ்ட்ரேஷன் வாங்கியிருப்பாரு, அவர் ஜிஎஸ்டி ஃபிகர்லாம் போட்டிருப்பாரு, எங்க கிரெடிட் எடுத்திருப்பீங்க. ஒரு ஸ்டேஜ்ல என்னாச்சு, கவர்மெண்ட் பிகேம் அவேர் ஆஃப் ஆல் தீஸ் நான்சென்ஸ் அண்ட் தேர் வாஸ் அ பிக் இன்வெஸ்டிகேஷன் அண்ட் தே ஐடென்டிஃபைட் ஆல் த ஃபேக் இன்வாய்ஸ் ராக்கெட் சப்ளையர்ஸ். ஒன்ஸ் யூ ஐடென்டிஃபை that the fake invoice has been issued, அவனை போய் கேட்டா யார்கிட்ட இஷ்யூ பண்ணீங்கன்னா லிஸ்ட் கொடுத்துட போறோம். Straight they will come to the person who has availed ITC. They will ask a simple question: have you availed ITC? நீங்க இன்புட் டாக்ஸ் எடுத்தீங்களா? ஆமா. எதை பேஸ் பண்ணி எடுத்தீங்க? இந்த மாதிரி இன்வாய்ஸ் பேஸ் பண்ணி எடுத்தேன். இந்த இன்வாய்ஸ்ல வந்து இந்த சரக்கு போட்டிருக்கு, இந்த சரக்கு எங்க இருக்கு? ஆன்சரே இல்லை, ஏன்னா சரக்கு வாங்கல. இது எப்படி டிபார்ட்மெண்ட் கண்டுபிடிச்சாங்கன்னா ரொம்ப இன்ட்ரெஸ்டிங். அவங்க டிபார்ட்மெண்ட் வந்து நம்ம மெனி பிசினஸஸ் அசியூம் that அவங்க ரொம்ப புத்திசாலி டிபார்ட்மெண்ட் வந்து ரொம்ப தூங்கிட்டு இருக்காங்க, ஒண்ணு பண்ண. டிபார்ட்மெண்ட் இஸ் ஈவன் மோர் அவேர் of what kind of nonsense some businesses do. So for example, இப்போ பிசினஸ்ல வந்து e-way bill இல்லாம மூவ் பண்ண முடியாது goods. So இந்த fraud invoice raise பண்ற ஆசாமி என்ன பண்ணாரு, he also raised e-way bill. உங்களுக்கு e-way bill தானே வேணும் சொல்லி e-way bill raise பண்ணிருக்காரு. e-way bill வண்டி நம்பர்லாம் போட்டுருக்கு. The department went one step further, checked the vehicle number and they found out that ஒரு சாதாரண ஒரு மோபெட் வண்டியில 200 கிலோ ஸ்டீல் தூக்கின்னு போற மாதிரி ஒரு டிரான்சாக்ஷன். ஏதோ ஒரு வண்டி போட்டிருக்கான். அவங்க வந்து they went to Motor Vehicles Act, went to the office and found out the number. So it is not as if they cannot investigate. Once they investigate, once you have identified that you have committed a fraud, then it becomes serious. It could land into prosecution and barbara judgments coming saying that no, even anticipatory bail will not be given, though I have legal views on that. But the fact remains that it becomes a nuisance, huge level of nuisance. Why go into all that trouble? On the input tax credit, genuine transaction மட்டும் எடுங்க. Buy goods, along with that get the invoice, avail services, along with that get the invoices, and then take the credit. Because if you don't do all these things and try to get the credit for a better cash flow, இன்னைக்கு வேணா சுமாரா இருக்கிற மாதிரி இருக்கலாம், ஒரே ஒரு வருஷத்துக்குள்ளே அது கண்டுபிடிச்சாங்கன்னா it can completely derail the business and bring everything to a standstill. In my view, just not worth it.
Very nice, sir. I mean, thank you for the deep insight. You know, or a legal question I would like to ask more from a legal perspective. So there are a lot of SMEs that even we have been seeing in the past. What they really do is they do not discharge the GST liability for a very long time, for months together. And then they stop using that company itself or the business itself, even in case of a sole proprietorship, to continue their business. They'll get into a different form. They'll neither close this entity nor close the GST number or the legal entity in itself, but continue doing their business through another route. From a legal perspective, how long can they get away with it? And is that the way to avoid the liability?
See, what has been done is done. It's very difficult to rectify things which have happened. See, GST is also very peculiar. The law expects you to file your returns by the due date. And 2 months succeeding, if you are not able to file your returns, then the system also blocks your e-way bill generating facility. Or sticker mari varum, ungala e-way bill generate panna mudiyadhu. E-way bill generate pannati unga buyer ungala deal pannave maatan. He will blacklist you as a supplier. So ungalku yaar customer o, he will no longer deal with you. So in the 2 மாச return file பண்றது வந்து பெரிய பிரச்சனை ஆயிட்டு. In fact, I have also made representation. I'm sure Tai or somebody else can also make a representation. Government should think of delinking return filing and tax payment. இப்போ என்ன பிரச்சனை, டாக்ஸ் கட்டாம ரிட்டர்ன் ஃபைல் பண்ண முடியாதுங்கிறதா இப்போ இருக்கிற சட்டம். சட்டத்துல அப்படி அவ்வளவு கிளியரா இல்லை, பட் போர்ட்டல் அப்படிதான் சொல்லுது. நீங்க போர்ட்டல் உள்ள போயிட்டு ரிட்டர்ன் ஃபைல் பண்ணணும்னா அந்த மாசத்துக்கான டாக்ஸ் லெவலுக்கு டிஸ்சார்ஜ் பண்ணாம ரிட்டர்ன் அது வாங்கிக்காது. இட் வில் நாட் அக்செப்ட் இட். அதனால என்ன ஆகுது, எனக்கு ஏற்கனவே கேஷ் இல்லை, ஏற்கனவே நான் இந்த டாக்ஸை கட்ட முடியாத நிலைமையில் இருக்கேன், இந்த டாக்ஸை கட்ட முடியாதால இந்த ரிட்டர்ன் ஃபைல் பண்ணல, இந்த 1 month I'm not able to file return, that becomes another problem for the next month. 2-3 months, if I'm not able to continuously file return, I get blacklisted, my e-way bill goes for a 6, and therefore it becomes a cascading effect of problems. So a lot of people, இது வம்பு வேணா எனக்கு பிசினஸ் பண்ண சொல்லிட்டு they try to shift to another. அது may be a short-term solution, but in reality, what is the story? If you're a sole proprietor, as an individual, you have got a PAN. If you're a partnership firm, as a partnership firm, you have got a PAN. Now the law is now contemplating even GST registration to be verified with Aadhaar number. They have empowered the act, provisions lang konundutaanga, but they have not activated it. And after this COVID, I doubt if they will activate it, because there is government is having other problems to handle. In the Sametla, they can't go for a Aadhaar related GST verification. But Aadhaar becomes a critical point. And therefore, if Aadhaar becomes a critical point, then it becomes a huge challenge in terms of this. Going forward, அந்த மாதிரி ஒரு சிந்தனை இருந்ததுன்னா அவாய்ட் பண்ணுங்க. முடிஞ்ச வரைக்கும் ரெக்டிஃபை பண்ண பாருங்க, முடிஞ்ச வரைக்கும் கிளியர் பண்ண பாருங்க எக்ஸிஸ்டிங் பிரச்சனையை, rather than starting just a new file, because new fileயும் அதே பிரச்சனை ஆரம்பிக்கும். எவ்வளவு ஃபைல் தான் ஆரம்பிப்பீங்க நீங்க? இன்னைக்கு இண்டிவிஜுவல், நாளைக்கு பார்ட்னர்ஷிப், அப்புறம் எல்எல்பி, எவ்வளவுதான் ஃபைல் கிரியேட் பண்ணலாம். At one point of time you will get caught. The law will say எல்லாமே ஒரே பிசினஸ், எல்லாமே ஒரே இடத்துல இருக்குது. கிளப்பிங் ஒரு கான்செப்ட் இருக்கு. கிளப்பிங்னா we don't relate to parties. Clubbing is that the turnover of each of these entities will be clubbed together and say, இதெல்லாம் actually the non-namki vaste entities, it's actually one entity, will club all the turnover. So if they start clubbing at some points of time, then there will be huge interest and penalty. So முடிஞ்ச வரைக்கும் don't do all these things which create problems. Where you have a regular problem in a particular businesses, try to solve it. Get some kind of or installment methodology. Go start paying the taxes. Ensure that your registration is back in action. Ensure that the cancellation is rectified so that you can continue to do your business.
Sir, a lot of SMEs think cash flow on the impact of the GST knowledge. Is that true? And if it is not true, then what would be your suggestions to these SMEs to plan their cash flow? And especially in times like today, when customer get in, the vara inflow is going to be slow, but vendor payments will have to be faster. Will GST really create an impact on cash flows?
See, I agree with whatever people are saying. GST is definitely a cash flow problem. Yena, let us take a simple example. Now I am raising an invoice for 1 lakh and I charge 18,000 GST. Yennoda customer, he may have his own credit system. In the 1 lakh plus 18,000 அவர் எப்போ கொடுக்க போறாரு எனக்கு தெரியாது. கஸ்டமரை பொறுத்த வரைக்கும் ஒரு சட்டம் இருக்கு. Whoever is a customer who is availing input tax credit, அவங்க 180 days from the date of invoice குள்ள அந்த பேமெண்ட் பண்ணா காட்டி அந்த கிரெடிட் அவங்களுக்கு நிக்காது. They have to reverse the ITC unless they make the payment to the vendor within 180 days. So there is a 180-day cushion at least for the customer. So he will say, by 180 days I will somehow make your payment. But before that I have to pay the GST. 18,000 I have to pay by the due date. Then I have to file my return. Therefore, the small player has to borrow money to pay the GST if they don't have cash flows. So they have to pay money upfront. There is a huge impact, and they have to wait for the customer to realize and give the money after 180 days. If there is a problem at the customer level and the customer does not even pay in 180 days and he simply reverses the credit, I still have already paid the tax to the government. So it becomes a huge impact for me. So somewhere I fully endorse every person's grievance on this, that GST is creating a cash flow problem because you are required to pay upfront. This is one dimension. Second dimension, government became obsessed with ITC. In the 10 பேர் பண்ற fraud-னால இல்ல அந்த fake invoice racket-னால they became so obsessed with that, and they started going to the person who avails ITC and said, unga vendor tax கட்டியாச்சா? Unga vendor, if he pays the tax only, I will give you credit. You prove that he has paid the tax. And I also want to check whether vendor has filed GSTR1. If vendor does not file GSTR1, and the GST will not come in your GSTR2A. If it doesn't come, I will not give you credit. So what happened? All the buyers panicked. And in our country or in life for that matter, in any contracting relationship, there is always a bigger party and a smaller party. Very rarely there are equal parties. If there are equal parties, if they are very friendly, then business will go on forever. But if there are equal parties and both are equally egoistic, then nothing will happen. We will forever be in deadlock. But in a business relationship, if somebody is a bigger player or a person who's got much more capability and might, then the smaller person will have to resort to that fellow for survival. So in the bigger company, ஒரு லெட்டர் அனுப்பிச்சிருவோம், இந்த மாதிரி நீங்க சப்ளை பண்றீங்க, நீங்க டாக்ஸ் கட்டாட்டி எனக்கு கிரெடிட் கிடையாது, அதனால டாக்ஸ் கட்டிட்டு அந்த டாக்ஸ் கட்டின ப்ரூஃப் கொண்டு வாங்க, then I will pass on your invoice. So இதை எதிர்பார்த்து many small SME players understood what the bigger person psychology is, what they're expecting, and they started getting into a huge better compliance system. ஒரு மாசம் 2 மாசம் cycle improve ஆச்சுனாலே then the confidence level improves as far as the relationship is concerned. But people who did not understand why this buyer was asking this refused, saying that நீங்க பணம் கொடுத்தா தான் நான் டாக்ஸ் கட்ட முடியும், இவர் சொன்னாரு, நீங்க டாக்ஸ் கட்டினாதான் நான் உங்களுக்கு பணம் கொடுக்க முடியும். இப்படியே ரெண்டு பேரும் பேசிட்டே இருந்தாங்க, இமெயில் எக்ஸ்சேஞ்ச் பண்ணிட்டே இருந்தாங்க. 3 மாசம் ஓடி போயிடுச்சு. அதுக்குள்ள யுவர் ரிட்டர்ன் டியூ டேட்ஸ்லாம் ஆல்ரெடி கான். ஸோ இட் பிகம்ஸ் அ ப்ரெஷர் which is also artificially created. So you have to understand, if a communication comes from a buyer and says, please pay the tax and give the proof, why is he asking? See if you can go a midway and talk to him, explain your problem, saying that, look, this month you release the funds, I will show the proof in the next month. Then from next month, I'll do something like that. Get into confidence with the buyers so that you'll be in a better position to comply with the law.
Thank you very much for that, sir. So I think rumba useful advice. Thank you very much. Sir, one another problem which I see a lot of SMEs facing is the ones who have partial export. So the ones who don't have export, they kind of understand they don't get refund. Again, the ones who do complete export, they would have generally used some professional help to set this all right. Now, the ones who do 40% export, 30% export, some of them do 60% export, they have no idea about LUT. They don't realize that the part of the business which the companies who supply to SEZ, it is in the form of an export and they can claim benefit. If you can answer in simple words for SMEs, it will probably help.
See, but GST you need to understand 3 terminologies. Taxable supply, you are entitled to input tax credit. Exempt supply, you are not entitled to input tax credit. Export supply, zero rated supply, they have defined what is a zero rated supply. Export is a zero rated supply. Supply to an SEZ is a zero rated supply. When supplies are in the nature of zero rated supplies, you are entitled to input tax credit, and under certain circumstances, based on the rules, you are also entitled to refund. So if you're an exporter, so as an exporter, what happens? The philosophy is that only the goods must be exported, the tax must not be exported. அதுல உள்ள இருக்கிற அந்த வரி எக்ஸ்போர்ட் ஆகக்கூடாது, சரக்கு மட்டும் தான் எக்ஸ்போர்ட் ஆகணும். ஸோ அது உள் வரிகளை உங்களுக்கு திருப்பி தராங்க. அந்த திருப்பி தரது தான் ரீஃபண்ட் ப்ராசஸ். ஸோ உங்களுக்கு 40% டொமஸ்டிக் 60% எக்ஸ்போர்ட் இருக்குன்னா, அந்த 60% எக்ஸ்போர்ட்டை யூ ஆர் சப்போஸ் டு கம்ப்ளை வித் சர்டன் ரூல்ஸ், லெட்டர் ஆஃப் அண்டர்டேக்கிங் சொல்லுவோம். ஃபார் எக்ஸாம்பிள், எல்லாருமே 31/3/2020 வரைக்கும் லெட்டர் ஆஃப் அண்டர்டேக்கிங் எக்ஸ்போர்ட் பண்ணிருப்பாங்க எக்ஸ்போர்ட்டர்ஸ்லாம். இப்போ 1/4/2020 ஃப்ரெஷ்ஷா லெட்டர் ஆஃப் அண்டர்டேக்கிங் இஷ்யூ பண்ணணும். பட் யாராலையும் இஷ்யூ பண்ண முடியாது, பிகாஸ் we are in lockdown. எங்கேயும் போக முடியாது, ஆஃபீஸ்க்கு போக முடியாது, ஜென்ரேட் பண்ண முடியாது, ஒண்ணுமே பண்ண முடியாது. So government has understood that and have issued a clarification saying that நீங்க பழசு பண்ண LUT will be accepted for the 2021 LUT also அப்படின்னு clarification கொடுத்திருக்காங்க. So COVID related clarifications are very friendly and very relevant. But what is important is that LUT is also critical, and the LUT is important to ensure உங்களோட அவுட்புட் அந்த 60% வெளில போற ஐட்டத்துக்கு you are not paying GST. Not only you are not paying GST, and the input tax credit உங்களுக்கு அப்படியே இருக்கு. You can either utilize it for your domestic transactions or based on proportionate turnover, based on formula, you can seek refund of your input taxes.
Thank you, sir. That was very useful again. So I hope in the conversation, a lot of SMEs will look at claiming the refund, because on the cash flow it might be very useful. Sir, as I mentioned in the beginning of today's session, I know you've won a lot of cases at Supreme Court and High Court level. So any specific case that you would want to talk about, which might be beneficial for our audience today?
Very interesting. See, with God's grace, I've spanned about 30 years of practice. And the 30 years of practice, I've been lucky enough to handle both the direct tax and indirect tax, both from advisory and litigation. And in fact, now I've forayed into data space and technology and AI. If people are interested, they can also look at my new book called as Taxation of Digital Economy, which is released and is now also available as an e-version, where I'm exploring how digital economy is getting taxed and how it has to be looked at. So when you're asking about cases, there are interesting situations and some cases have been argued for the first time. Some have been argued for many times and again re-argued. ஒரு கேஸ் நல்ல ஞாபகம் இருக்கு. இப்போ when service tax came, service tax வந்து கன்ஸ்ட்ரக்ஷன் இண்டஸ்ட்ரிக்கு போட்டாங்க. முதல்ல என்ன பண்ணாங்கன்னா கமர்ஷியல் கன்ஸ்ட்ரக்ஷனுக்கு போட்டாங்க. If you are doing commercial construction, service tax கட்டணும்னு சொன்னாங்க. Then they introduced service tax on residential complex. So residential construction was brought to tax, but they had a very peculiar definition. They said residential complex means a building which comprises more than 12 units. So My argument was, there must be a building like this, which has got more than 12 flats, or a building like a railway train, where every flat is connected or every house is connected and is more than 12. Then only tax will be there. If I'm constructing a single house, or if I'm constructing 100 villas in a campus, each villa is a separate house. It is not a complex and therefore not taxable, was my argument. And that luckily was accepted at various levels. And finally, we won the case to the effect that what you construct as a villa is not a construction of a complex, because a complex is envisaged different. The law got changed and even more than one became taxable. But for that period, we really were able to establish. Second is, many people are members of clubs. If you are a social club member, and the club you may go every week, or you may go once in a month, or you'll get a monthly minimum balance payment or something like that. So, normal SME, உங்களுக்கு கஸ்டமர் இருக்காரு. ஸோ 2 பேர் இருக்கீங்க, நீங்க விற்கிறீங்க, அவர் வாங்குறாரு. Therefore 2 persons exist. In a club, ஒரு 100 பேரோ 200 பேரோ are members, and the members are also the club. So club and members are one and the same. Therefore there are no 2 persons for taxation. So இது வந்து இங்கிலீஷ்ல என்ன சொல்லுவோம்னா, it's called as mutuality, doctrine of mutuality. It will apply to associations also. The argument என்னன்னா, the club and its members are one and the same. Since a club and its members are one and the same, there is no question of tax between them, because there cannot be a sale from a club to a member. There cannot be a service from a club to a member. This was the argument, and this was accepted by the Supreme Court in a landmark decision where they very clearly said, you are not liable to pay service tax, you're not liable to pay VAT, because club and its members are one and the same. My journey has been interesting, because thanks to the kind of clients, I've understood hotel business, I've understood healthcare business, I've understood continuous processing, I've understood entertainment and media. Very, very interesting issues comes up in entertainment and media. I've understood film industry, how it operates. I've understood even technology, how it operates in the back end subsidiaries. So I have to thank many of my clients and customers in the journey, because by explaining their business to me, they enriched my knowledge about business. And without knowing business, you cannot advise. And the client or the business, you can advise. And that facts helped in many of the cases. And I was able to succeed only because of the knowledge of facts.
Thank you. Really appreciate the genuinity behind all of this, and the fact that many of your cases have actually helped in change of law as well. So, one request that I'm getting from a lot of people is we have to probably stick only to English, because a lot of members of the part of the audience are from other chapters as well.
Okay, got it.
Sir, now I'm going to move on to some of the questions from our members. And before I read out the questions, I would request the audience to just type their questions. We will not be unmuting anyone for the sake of time, and to make sure that we have relevant questions asked during today's session. So the first question that I would want to talk to you about is, it's a very interesting question. So one of them have asked, if we pay 15 days salary to staff now in the month of April, when they're not doing business, is it considered a CSR activity?
CSR is the biggest controversy. I think today Financial Express or something is also, Times of India is carrying an article on it. See, corporate social responsibility is governed by statute. So Companies Act, there is a clear schedule which says what are the listed items that are identified as CSR. And one of them is, of course, the Prime Minister's National Relief Fund, as well as the PM Cares, the new one, trust that has been created. There is a debate as to whether if I contribute to CM's Relief Fund, it qualifies or not. Any contribution directly to CM's Relief Fund may not qualify, is what the Ministry of Corporate Affairs has clarified. But if it is meant for a disaster management fund, or the state has identified a particular fund for disaster management, it should qualify. So in the there are very clearly listed items in CSR. So if you are doing any of those activities, you would qualify as CSR. But payment of wages during the lockdown period, or payment of salary during this lockdown period, would not qualify as CSR. Please don't get into that adventure.
Thank you, sir, for that. I've got another question here which says, is there any relaxations announced by the government for retail segments, whether it is textile, jewelry, or any kind of retail segment?
See, there is no specific sector-specific announcements, but there are some reliefs in GST, and many would also be aware because they have been told by their consultants, or they themselves would have been aware of that. We have the February return, we have the March return, we have the April return. So let us take the March 2020 return, and assuming your turnover is more than 5 crores. So assuming your turnover is more than 5 crores, you're supposed to file your return by April 20th. That is the due date for filing the return. What the government has done, in my view, that is not the best thing they should have done. They should have done something else. I'll come back to that, what they can still do. What the government has done is that they've said the due dates are the same. We are not tinkering with the due dates. The due dates will remain as such. But if April 20th is the due date, we'll give you 15 days time. You file your return by May 5th and pay the tax, then there is no interest. But if you file the return after May 5th, but before 24th June, pay your taxes, you will also be liable to pay interest at 9%. Beyond 24th June, if you make a payment and file the return, your interest is 18%. In my view, this is not the best of reliefs. Ideally, they should have said there should be an interest waiver up to so-and-so 30th June or whatever it is. This collecting 9% after May 5th and giving a 15-day period of grace is just not enough. Take your examples of retail, your examples of jewelry, your examples of textiles, your example. Today, every shop is closed. Every shop is closed unless you're in the grocery segment or in the medicine segment. So if you are in that kind of situation, you're not able to operate, enter the mall, the malls are closed, the shops are closed, the roads are closed, the shopping centers are closed. No customer is going to come or is allowed to even come out to this place and look at shopping. Therefore, you don't have sales. If you don't have sales, where is a question of cash flow? Of course, the logic is that I don't have sales, therefore I don't have much of GST to pay. But to the extent of what you make a payment, even that you may not have the cash because money is not going to come so easily. So it is a huge challenge because not many retailers have huge cash reserves. Many of them operate in the first 10-day, 15-day sales, they rotate into 20-day sales, etc. So it's a huge challenge for retailers. And ideally, what the government should do is that they should say, we will waive the interest completely. You file your returns and pay your taxes by 30th June. We will waive this interest. There's no question of 9% after May 5th and 18% after 24th. That is the approach which the government should take. I'm sure they would take it at a second stage or later stage when representations come to it. But right now, there are no specific sector-oriented reliefs, but I'm sure it might come because there is a second package that is expected anytime this week. So if the government announces a special package sector-wise, it should be welcome. I do feel that retailers will have a problem. Why? Because not only are they closed today, the date for opening is also doubtful because you don't know whether you're in the red zone or the orange zone or in the green zone. And even if you are able to open your shop and you're able to operate, your customers coming in would not be the same. Customers would still have the fear factor. Not everybody are the crazy jokers who go around in two-wheelers as if they have nothing else to do. There are a lot of sensible people who are staying at home. So these sensible people who are the consumers for the retail sector may not come to the shop so quickly. The confidence level will take some time. So how long can you weather that kind of pressure? That will be the biggest challenge for retailers and shopkeepers and outlets and job workers and service providers who are in the segment where they are very vulnerable. In fact, I would identify at least 5 industries which will immediately get impacted. And it is not that I hope that they get out of this, but it is a huge challenge. One is clearly tourism. People who are in the tourism business, people who are arranging tourism. I'm sure nobody would want to venture out anywhere abroad. Even if it is a business conference, they'll say, let us do it in Zoom. So it is unlikely that people are going to travel abroad. It's going to take a long time. And even if India recovers fully, the countries which you want to visit may not have recovered fully. So tourism will have the first impact. Then you will have, of course, the travel sector, the airlines and related sectors will always have an impact. Hospitality will have an impact because you will not suddenly go to the restaurant just because things have opened up. You will still take time. Of course, it's a huge challenge with children at home. Every child at home is now, I'm sure, pressurizing. I'm sure every person in this call would know the kind of pressure which children apply on their parents, saying that delivery has happened, why don't you order food delivery? It is not easy because people are still scared. So, and after that news item about the pizza guy and COVID-related issues, and that people have become even more scared. So, travel, tourism, hospitality would be the impacted, severely impacted segments, and then you will have entertainment also getting impacted. People will not go to theaters so quickly. And last but not the least would be the support systems for all these things. So everywhere you will find media. Media will also get impacted because who's going to advertise? Who's going to advertise about fancy product if nobody's going to buy? So if advertisement is not happening, then media's revenue completely dries out. These are 5 which will face severe impact immediately. The rest of them, I feel it is more of a pause. And the pause can suddenly change into a super growth in terms of positivity if things open up in a big way. If things open up and things change, it is immediately possible that this pause will completely be forgotten. But for these 5, it will take some time to come out of it.
Thank you very much, sir. So there are a lot of people who are still very unclear on the concept of RCM, reverse charge mechanism.
Yeah.
And is it already has it already become mandated, or what is the process? What is the progress? How does it impact SMEs?
See, the reverse charge mechanism works in 2 ways. Original, when July 2017 reverse charge mechanism that was brought in was very, I wouldn't say it is the best one, because it said that anybody who is unregistered, registered person has to pay tax. Now that makes no sense, because the fellow will come and put a water can in your office. Somebody will put some courier, or somebody would some carpentry work. We can't go and pay GST for all those things. So it became a big challenge in terms of that. Therefore, government also understood, GST Council understood. So they said, we'll keep that in abeyance. So that got, in a way, it got rid of. But there is another reverse charge mechanism. Now, let me explain reverse charge mechanism. If somebody is a SME or somebody is a chartered accountant, they provide services and therefore they pay GST. That is what is called as forward charge. Government feels that in some cases, let us apply reverse charge. Reverse charge means somebody is the supplier of services. The recipient is called upon to pay the GST. He has to register, pay the GST to the government, raise a self-invoice. For example, legal services. I provide legal services. Whenever I provide legal services, my client has to discharge the GST and raise a self-invoice and pay to the government and take credit of based on their self-invoice. Or let us take the case of a goods transport agency. A lot of people get confused. Sir, what is this goods transport agency? I'll try to give an example to make the whole thing clear. Let us say there is Vel Murugan Transporter. Vel Murugan Transporter is a person who runs the lorry. He's a trucker. Then there is Kumaran agencies. Now, these Kumaran agencies will engage Vel Murugan in order to supply goods for ABC Limited. So ABC Limited comes to Kumaran Agency and says, I want this goods to go from Chennai to Kanpur. So Kumaran agencies will go to Vel Murugan Transporter and say, please move these goods from Chennai to Kanpur. Vel Murugan is the transporter, not at all liable to GST. Transportation of goods by road is out of GST. Kumaran agencies is the person who's between the transporter and the consignor, and therefore he is a goods transport agent or agency. Whenever GTA is there, then there are 2 choices. The GTA can himself raise an invoice and charge 12% GST, in which case it is forward charge. In case the GTA does not charge 12% GST in his invoice, the person who is a recipient of the goods, consignor who is going to move the goods, will pay 5% GST under reverse charge. So only for GTA you have a choice. He can either charge 12% or simply keep quiet. If he keeps quiet, nothing happens, somebody else pays. If he charges 12%, it becomes forward charge, he files his return. Then the third reverse charge is very important, is directors. You would have seen the newspaper articles and everybody got into panic mode. Directors are liable to GST under reverse charge. Company is liable to pay GST for even whole-time directors. That is a wrong proposition. Please be very, very clear. You have to understand what is an AAR, Authority for Advance Rulings. Authority for Advance Rulings is a mechanism in the GST Act whereby somebody can go and ask a question, sir, is this taxable or not? It is a double-edged sword. When you go and ask this authority, let us say XYZ Limited goes and asks this question, The answer given by the AAR is binding on XYZ and the government. It is not binding on ABC. It is not binding on anybody else. It is binding on the person who has sought the question. So the person who is seeking the question must know the consequences of the answer. If the answer is taxable, he is finished, unless he is even going to AAA, second AAR, or is going to writ petition or something like that. But others are not affected by it. Unfortunately, the way it gets transferred, because what happens today is any AAR ruling is 95 to 96% is pro-revenue. And you can't blame it, because the person who's sitting in AAR is from the revenue authority, from the department, and they are sitting officers. So why should somebody go and seek an AR when they have doubts about this? They should look at interpretation, or they should look at their own advisory. But since they've sought a question, they answered. So they said, even for whole-time directors, RCM is applicable. But no, what does the law say? If somebody is an employee to employer, there is no question of GST. A director is an employee. A managing director is an employee. A whole-time director is an employee. An executive director is an employee. So in all these cases where you are paying salary or you're deducting TDS under section 192, where employer-employment relationship exists between the company and the director, there is no question of RCM in the hands of the company. But if there are independent directors, then the question completely gets altered, because for an independent director, what he receives is not on account of employer-employee relationship. It is on account of a different relationship. RCM will apply. Company has to pay GST under reverse charge mechanism. Unfortunately, the AAR ruling was in the context of full-time directors, and therefore people went into panic mode. And since the press reported and social media shared it big time, everybody is asking this question. Please go back to your drawing, your board. Look at your terms of your MD. It will clearly say employee. Look at your payment mechanism. You have deducted TDS under 192. You have booked a salary. That makes it very, very clear that there is no question of tax or reverse charge on this.
Thank you very much, sir. So that was very clear, and thank you for answering the question on the RCM on directors' remuneration as well, because a lot of people seem to be confused from that perspective. I've got a specific question from someone who runs the Computer Training Institute, and he says that his turnover fees oscillate between 14 lakhs and 24 lakhs. Should he really register for GST? And if he registers for GST and the next year he does not have turnover exceeding 20 lakhs, what happens?
See, this is the question which keeps coming up, because somebody is in the threshold and they are likely to cross, and they may not cross next year. I would say that if you're going to cross this year, then go for registration, because you are doing 24 lakhs. You can definitely you have to go for registration. That's a mandate anyway. And then next year, by continuing in registration, you're not going to lose anything, because you're getting into an organized frame of businesses. And based on GST raised invoices, the banking system also recognizes that invoices much better. Your compliance of GST will help your credit rating from various segments. So it is just a matter of time that you may breach that 12 lakhs or 14 lakhs, and you again reach your 24 and cross further. So I don't see that as a big issue. But if you don't register even after crossing the threshold, then you're willfully violating the law. And if something happens, then the entire business collapses. So if you're liable to register, please do register.
Perfect, sir. And there's also a question which talks about, is late payment interest applicable on gross liability or net liability? I think what he means is net liability after adjusting ITC.
I'll take some time to explain this. Let us say I have a monthly tax liability of 5 lakhs. And this 5 lakhs, I have in my monthly return an input tax credit of nearly 4 lakhs. And because I've delayed my return by, let us say, 140 days or something, the tax authorities slapped me with interest under section 50 at 18%. While they're calculating this interest, they are calculating on this 5 lakhs. Whereas my argument is, look, I had already credit of 4.5 lakhs and only 50,000 is the cash component. On the 50,000 cash component, I will pay interest. I have no problem paying interest. But why are you levying on the 4.5 lakhs? Now, please understand, this man had delayed his return because he is not able to pay that 50,000 cash. because he's not able to pay the 50,000 cash through the return, he has delayed his return. You want to slap an interest of another 18% on that 5 lakh, including that 4.5 lakhs. Where will he pay? It doesn't make sense. Plus, let's look at the 4.5 lakhs which he took as credit. That was based on some valid invoice. That was based on goods received. That was based on some other supplier who has already paid that 4.5 lakhs to the government account. So if government has already got that money, then where is the question of revenue loss to the government? Interest is supposed to be compensatory. So tax credit is also tax paid. This has been our argument. Now, what happened was in Telangana, there was a decision, and that decision went against the assessee. That decision said you can calculate interest on the totality, nothing wrong. So based on the decision, all kinds of demands were taken. Then the matter went to GST Council. Then the GST Council decided to amend the act and provide that interest will be only on the net portion and not on the gross portion. But the amendment was never notified. It was kept in hold because GST amendments are not easy because every state has to amend their respective laws. In the meantime, the matter came before the Madras High Court, and the Madras High Court passed a very elaborate reasoned order where they said that they referred to Telangana High Court, they referred to the amendment, they referred to all other aspects of law of compensatory interest and said that interest should be only on the net portion and not on the gross amount. And you cannot charge interest on the ITC portion. You can charge interest only on the cash portion. So right now we have a decision of a single judge, which is an elaborate judgment as far as Madras is concerned. Madras High Court jurisdiction is applicable. Matters are pending across the country on these matters, and the amendments are also there as part of the statute. So whenever the amendment gets implemented, you will again have some kind of relief.
Thank you very much, sir. Very useful response. Thank you very much, sir. So we've got another question before we start moving on to audience question. Is if we apply for refund for tax paid on export, of course that's answered. But the question that they have asked is where to submit the document. I mean, now it becomes important for them to know. Looks like a lot of people still don't know how to submit for export refund. Whether it's a physical document, do they have to go meet the department?
No, it is still an online application, and the as far as GST goes, everything is through portal. Either it is an activated item in the portal module, or it is not an activated. There are some aspects of the GST which is yet to be active because the module is not active. There are huge challenges in the portal. Let me not get into that topic. But your application is through the portal. And let us say you're applying for refund of input tax credit because you're an exporter. You're asking for a refund of your input tax credit because you've exported goods or services. Then you're supposed to file this form RFD01, and then you'll have to reverse the ITC, which you're claiming as a refund, and then upload this. Now, sometimes in some jurisdictions, they also ask for an additional copy, and they ask for copies of invoices. But most of the time, the board has always clarified saying, don't insist on invoices. Look at the GSTR 2A and ITC match, GSTR 3B match, that should be enough. So in my experience, people are getting refunds. It's not as if they're not getting up refunds, getting refunds. What could happen is the tax authority feels that this ITC should not qualify for refund. For example, he comes to a conclusion that this is not used for business, or this is maintenance and repair and is in the nature of capital goods. I would not give you a refund. So if he comes to such a conclusion, he cannot deny the refund. He has to issue a notice questioning the ITC, because ITC mechanism is different, refund claim is different. So somewhere the officers do mix up both, and in the process of refund claim itself, they deny the ITC, which is not the right route. Even the board has said so multiple times that you should not do that. You should allow the refund claim, and then to the extent of what is ITC denied, you should issue a separate show cause and do it. In reality, there are enough circulars available in the website of CBIC, Central Board of Indirect Taxes and Customs. You look at that clarification pertaining to export. There are step-by-step methodologies. There are even e-flyers on export refunds. Plus, there are help centers even in the department. Anybody should be able to clarify, because GST is still on a friendly mode. Of course, today, because we are on a work from home environment, you have challenges. But otherwise, the information should be available from the website as well as from the relevant government officers, or you can approach your own consultant or professional who can help you.
Thank you very much, sir. So I'm going to read out a question from one of our audience. I'm going to just read it out as it is. So that he says, I agree that more the compliance is much better possibilities for growth, but particularly at this cash crunch situation, the customers, especially the small customers, might feel comfortable to buy material without GST. And unfortunately, there are a lot of people ready to sell without GST. In such a case, they become our competitor. And in current situation, what other better possibilities we have to overcome this situation for small customers?
It's a very tough question to answer because I fully sympathize with the person who's asked the question, because I have also felt it in many ways. Even before COVID situations, there's what is called as unhealthy, unethical competition, whereby somebody wants to comply with the law, somebody is duly registered, somebody wants to file his return, raise an invoice, and charge a GST of say 12%. There is a competitor who does not believe in all these things and is willing to accept cash and not charge 12%. And the customer, unfortunately, goes to such a supplier because in a B2C transaction, in a business to consumer transaction, the potential for evasion is very high because the evasion is driven by the customer in many ways. Now, I'm not trying to generalize, but take a jewelry industry scenario. In a jewelry industry scenario, the jeweler, in fact, I had a very interesting experience. I was called upon to just talk about GST for 15 minutes to school kids. I've talked to professionals, I've talked to government officials, I've talked to academicians, I've talked to students, but students in CA or something, but never school students. So I was a little bit tense in the sense that a student can always throw you. School students are, you know what they are. So, but it was nice. I had to dilute the way I speak and I went on FAQ mode. So I asked a question. As students, tell me, in GST, which is the item which you think will have the highest rate of tax? There were about 30 of them. All of them said jewelry. Then I had to explain to them saying jewelry is 3% GST, whereas there are other items which are cement is at 28%. They were stunned. They didn't like the law. They said, how can you tax other things at 28? We should tax jewelry at 28. So I had a lot of time to explain, took a lot of time to explain to them saying that jewelry is a very peculiar sector where you can't afford to pay a 28% GST because 90 to 98% of the value of jewelry is gold, and gold is imported. That being the case, there is no question of significant GST except the IGST that you pay on the import, and it's a very tax-sensitive sector. So they asked me, "What do you mean by tax-sensitive sector?" I said, "Let us take a customer walking into a jewelry shop. She or he looks at the jewelry designs, etc., compares, happy about it. The moment the price is talked about, there is some complex calculation done, and then the price is good. Now, this person who's buying tells the jeweler, can you give me without invoice? Now, the jeweler is not interested. You'll be surprised. Many jewelers would like to actually comply with the law. But the customer drives him, saying that, look, I have cash. I don't want to disclose this transaction. The problem comes from elsewhere. The customer who's buying has got cash or illegal sources or whatever sources he has, and he wants to convert this cash into gold or jewelry, and he doesn't want the transaction to be reflected in the system. So whom do you change? How much advisory can you give? How much of citizen reform can you implement? So it's a slow but good journey. India is now in this path of increasing the tax share to GDP. It's a slow but good journey that we'll slowly take. We have to get into. It is just not the business which has to comply. The customer also has to comply. Now, why are you facing a problem? The customer is going there. What happens if the customer goes to that particular shopkeeper and says, I want an invoice. I insist on an invoice. Now, imagine a culture where every customer insists on an invoice. In fact, you have seen those shops in, we call them quick service restaurants, or these franchisees of coffees and ice creams and teas, etc. When you look at that billing counter, there'll be a machine which he operates. There'll be a sticker. If invoice is not issued, this is free, and call us. Now, why does that happen? Because that fellow is a franchisee, and that franchisee turnover is the basis through which their relationship exists between the franchisor and the franchisee, and the royalty to the franchisor depends on the sales made by the franchisee. Therefore, he wants an eagle eye on what is the turnover. He wants the reporting to happen. Therefore, he's got this control mechanism. So if you're able to devise interesting system, government is trying to think of even a luxury draw, where you can buy goods from goods from registered persons, put this invoice in one lucky draw. If your invoice is picked up and your address is there, you'll get a prize. So make people do certain things. In fact, it's a very interesting thing that you may have to change the mindset of people in terms of going towards an organized system of procurement than an unorganized system. Now, once the market changes and the customer started insisting on invoices, that person who was trying to evade the law would also change. He would also start raising invoices. And the other method which the government should look at is, if, and that's a problem with the government, because the government cannot do it without number of the revenues going up. We have a struggle in terms of what is GST revenue, touching more than 1 lakh crores. If compliance goes up and the revenues goes up significantly for the government, then the government will also look at reducing the rate of tax. Why should we have GST at 18 and 28? We should be in a position to have GST at 5 and 8 and 10 or even 12 max. If that is to be done, then revenues have to go up. If revenues go up, then the government gets the leeway to reduce the GST. And if 5% GST and 8% GST comes, the evasion tendencies also goes away to a large extent. So it is a massive reform that is required at all ends, and it's a time-drawn process. But I'm an optimist. I firmly believe that India will reach that point of time where the levels of compliance will go up and the revenues would also go up and the tax rates will come down.
Thank you very much, sir. So we've got one additional question here, which talks about, again, a common problem faced by SME. What are the options available in front of me if my suppliers are not depositing their GST tax or returns?
This is a very, very live problem both for SMEs and the big companies. The big companies might say that the SMEs are not complying. The SMEs might say that my vendor is not complying. Now, the whole problem stems from the fact that the ITC availment artificially linked with the return filed by the supplier, which is a proof that he has paid the tax. In my view, the law has to change. This is a very onerous requirement. I've received the goods, I've received the invoice, I've looked at the website, I can see the GST name, I can see the supplier's name, I can see his GST number, I can see his live in GST. What more should I do? I've paid for the goods, I've received the invoice has got all the details, the GST dealer is live as far as the website is concerned. What more can I do? Is the question which the assessee is asking, and I'm also asking. I fully agree with the assessee that it's a very onerous requirement on the part of law to say, check whether he has paid the tax. And that is why writs are pending in Delhi High Court, that it is an onerous requirement. It makes, I cannot go and run and do CPA work and find out whether supplier has paid the tax. That is not my responsibility. That is your responsibility. It's not my responsibility. You go and check whether supplier has paid the tax or not. So this linking GSTR 1 and 2A and linking GSTR 2A and 3B is something which is definitely questionable. It goes beyond what is there in the statute, but unfortunately people have accepted that as an effective mechanism, and we have this now artificial 20%, 10% rules, etc., which are also there. But it's a two-way process. You can talk to your suppliers, convince them to file the returns, tell them what is your problem. Tax portion is a problem. Okay, I'll give you an advance of tax portion alone. Please file the return and ensure tax is paid so that I get the credit, and then I'll release the balance in some installment. Something like that you need to cajole and ensure that people comply with the law. And if you are dealing with an errant supplier who says, I don't care, this is how I will do, I will not do this, then it's time to hunt around for another supplier. And today's market is going to be difficult. People are going to struggle to retain business. So a person who's going to have significant errant ways is not likely to succeed. There'll be another player coming in. So you have to look at alternative supply chains.
Thank you very much, sir. I'm sure that will help a lot of, I mean, as you rightly said, it's just not SME's problem. A lot of companies are facing that problem. And government's definitely doing their bit by improving mutual relation between the suppliers and vendors. Thank you very much, sir. So the next question I'm going to put forth to you is, a gentleman here says that I have a problem with IGST. I made a supply in Andhra Pradesh. I've got IGST of about 1 lakh. When I'm making my month-end GST payment, I am not able to fully use IGST credit to make my GST payment.
I can understand that, because see, so today I was talking about bigger companies and smaller companies, and bigger player, smaller player, or in a relationship who's stronger, equal, etc. In GST, the portal is the king. The law would say something, but sometimes the portal might do something opposite. So today, if you are filing your return, you will have to go by what the portal says. And the portal is based on how the module is structured based on the rules. So the portal is structured based on the rule which gives a sequence in terms of set off. You cannot beat that set off. You have to go with that set off. But if that set off is wrong in terms of the statute, then you may have to point out and try to seek the changes in the portal. But currently, the portal behaves as per the requirements of the statute in terms of sequence of set off, which goes first, which goes second, which should be exhausted first, which should remain. All those things are well ingrained in the statute. And based on these principles, today IGST might be blocked in some cases. There could be IGST accumulation in some cases, but they are all part of the system. In fact, I'll even give you some particular examples where you may not even get credit. You could be a company based in Chennai. Your marketing executive goes to Mumbai for canvassing for orders. The executive stays in a hotel. Now in Maharashtra, when he stays in a hotel, the place of supply provisions for accommodation is such that place of supply is the location of that particular immovable property. So the hotel would charge CGST and Maharashtra SGST. Now you don't have a place of business in Maharashtra. You don't have a registration in Maharashtra. You're sitting in Chennai. That bill is useless to you because you can't take the credit. So GST has got those kind of peculiarities. You cannot tell the Maharashtra hotel fellow to charge you IGST because he is bound by the law which says he has to charge CGST and SGST. So like that, there are cases where even you may actually lose significant credits because of the fact that it is SGST or in some other case.
Thank you very much, sir. So we have another question, and I'm going to read that out directly. It says, sir, I'm running bed business from 2019 April. I paid nearly 1 lakh GST and just 40,000 claimed. Since many things I made a stock for showroom, what is the way to get a reimbursement for the same?
I'm sorry, I didn't understand the question.
I'll just translate that. So what this gentleman has a problem is he started the business in April 19 and he runs this bed business and looks like he has an output liability of 1 lakh GST liability and he has claimed a credit of only 40,000. Since most of it is a capex that he has incurred, not so much of a purchase. Now, what he wants to know is there any other way to claim reimbursement or set off the 1 lakh liability that he has got?
See, if he has set up his business and he has invested in a showroom and things like that, he has to check what are the inputs and input services and capital goods which are involved in the process. So, civil structure will not qualify. Going by strict, I'm not getting into adventurous interpretation based on decisions, knowing the profile of the audience. Let us go plainly by the statute, though there is a view that I may be able to take on construction. But based on the judgment of the Orissa High Court. But let me not get into judicial interpretation or decision-based. Going by the statute, I may not be able to take on the civil structure. But there are capital goods, machinery, equipment which would qualify. There are input services, things which would qualify. There are designer services, etc. which would qualify. The rent which I pay to the landlord would qualify. So I have a host of inputs and input services and capital goods on which GST would have been charged. I'll be in a position to accumulate that credit. Now, once I avail the credit and accumulate the credit, every month it will get carried forward. So for the next few months, when I actually make sales and when I start raising GST invoices, I'll be in a position to collect the GST in the invoice. But when I have to pay to the government, I'll be able to use this huge credit which I have. So if you're a new business, there is a very significant possibility of your cash flows being good because you'll have a lot of accumulation of ITC. So all you have to do is you have to revisit your invoices and look at what are the invoices on which I can take the credit. Look at the time frame by which I can take the credit. If not time frame, please avail the credit in the next possible opportunity to ensure that it is forming part of your ITC. Because understand, credit is very simple. Inputs means any goods used in the course or furtherance of business. Input service, same definition. I just have to show that I'm using it for business. If you're using it for business, take the credit and just be aware of what are the items on which I'm not entitled to credit. That also is enough clarity is available in the public domain.
Thank you very much, sir. I have a question from a young practitioner and they want to know if there are any specific tips for young practitioners.
Lawyer, I presume.
Not sure.
Okay. I will give the advice for two kinds of young practitioners. Let me take the case of course, it makes me feel old that I have to give an advice to a young practitioner. But the way I would I will say is this. If you are young and you have just started your career, and let us say you've spent 2 years in practice or 3 years in practice, you have the journey well, where you can plan your journey. The way you have to look at this, find out which is your passion. If you're looking at, if you already started a particular stream of, let us say, a tax practice or a IPR practice or a civil law, focus on that. There are enough learnings to be done. In fact, there is no end to learning. You can continuously learn. And if you're able to constantly update your knowledge, it will definitely translate into some kind of benefit. In fact, do not look at money initially. It's a very, very difficult advice to give, and it's a challenge. But I think lockdown would have also taught us that what we assumed as imperative consumption items are no longer imperative. People are able to adjust very quickly, even in their households, eating, they don't have to go to restaurants or films to be entertained. They're still fine. So it is quite possible that our consumption levels can also be at a very low level and can still be happy. So at an early age, do not focus only on revenue, because if you focus only on revenue, your learning journey will get affected. Money will come. Money is a byproduct. As you grow in your career, you will get your laurels, you will get your money. And after a point of time, it will not really matter, because you will simply start growing. It is investment. You have to invest a lot of time in reading and taking it forward. From day one, if you're able to bring in good ethical practices, and if you're honest and transparent in the way you deal with your clients, the way you deal with your authorities, your judges, your courts, or if you're a practicing chartered accountant, the way you deal with your filings, the way you deal with your audit aspects, your daily with the institute, the more and more systems and ethics and compliance related honesty that you bring in these investments, solid investments. And over a period of time, it won't become an audience, it becomes a practice. The same can go wrong if you're doing illegal things. If you do start illegal, the journey might be very interesting initially, but then later on, the damage will be huge. So if you're a young guy, you have options available. And look at new avenues that are coming up. Look at technology. Future of practice and law would be in technology. How do you deal with robotics? How do you deal with data? How do you deal with privacy? How do you deal with COVID kind of situation? How do you deal with trade wars between countries? How do you deal with environment laws? Everything is new. How do you deal with different new laws that are likely to come? For example, many of us didn't know that there was this Dangerous Epidemic Diseases Act, which was done in the British era. The entire lockdown is based on that act. All the GOs are issued under that act. Only later, the Disaster Management Act came into the picture. Before that, it was that old British law which was used. And there were such laws even before, where that was used for the Spanish flu at that point of time. And subsequently, it is used now. So there are enough laws available if you're a lawyer. If you're a chartered accountant or a company secretary, company law is a huge scope in terms of practice. And you can grow you can set your name and your mark there. Do a lot of knowledge acquisition in any arena that you do. Even in this lockdown period, there are ways you can simply eliminate this lockdown by finishing one Netflix in the morning and one Amazon Prime in the evening, and have a little bit of channel in between, and finish off WhatsApp at every break. Days will just go away. But this is a God-sent opportunity. In that sense, you are forced to stay at home, pick up. There are enough digital sources. Read up if you can, and you will definitely reap benefits. And best wishes for whatever career you are in.
Thank you very much, sir. That should have been very useful to our young practitioners. So we have a question on continuing to what you had spoken about clubs earlier. The question is now, what is the status in clubs?
This is a very tough question to answer, given the fact that some of the clubs are also my clients. It's like this. It took a long battle to reach the Supreme Court and get this judgment. And Indian litigation takes time. It's not as of this designed to take time. The courts are all clogged, completely clogged. So a matter to reach Supreme Court takes years. And given the fact that while we won the battle for the past period, when it comes to GST, the same rationale should apply. The principles are the same. Two persons don't exist, therefore GST should not apply. But then clubs are also some clubs have taken a position that, okay, we'll apply this decision and this Calcutta Club decision and say that we will not pay GST. But some clubs have taken a position, I don't want to risk it. I don't want another battle to go all the way to Supreme Court. I don't have the time or the patience. And as a today's president, I don't want to take this call. I'm charging, members are paying. What is the problem? So I will continue to pay. So it's a huge, it's a decision making at the club level. And while it is definitely possible that GST is not applicable in a club based on mutuality principles, litigation is also possible. And one must be ready to face the battle. And some clubs are also ready to face the battle because the stakes are high. So they have taken a call that, yes, we will continue to take this position of mutuality and we would fight it. In fact, this is another problem in even residential welfare associations. Even in residential welfare association, the same logic should apply. But then who will bell the cat? Most of the residential welfare associations are governed by their own principles, and you have a committee which is sitting on it. And no secretary or treasurer or president is going to take a risk of not charging. Because if something happens tomorrow, an association is not in the same position as a big company to fight the battle. So conservatively, associations are paying taxes. But if you look at it, mutuality is equally applicable to associations. Ideally, government should get rid of this problem and say, why do we want to tax the residential welfare association? What is the money that they're going to get from that? 18% GST on what? You're collecting 7,000 plus from the 7,500 plus from a flat. For what purposes? For the maintenance of the flat, for the upkeep of the flat, for the where you won't benefit. Where is the question of the association making a business activity out of this or money out of this? So government should think at it holistically and try to keep all these things out of tax. Why should a Chamber of Commerce be taxed in GST? They're only providing benefit to the members. Why should an association be taxed? The government should think through this and say, okay, the revenue is not significant, but unwarranted interpretation litigation, we'll keep them out of tax. You're not going to lose significant money profit, but you will give so much of relief because no association makes money. Let's be clear. No welfare association makes money. Getting this subscription itself is a challenge. Getting monthly maintenance is a huge challenge for a flat. You may have 6 flats in the complex. The ground floor flat fellow will refuse to pay maintenance, saying that I'm not using the lift. Every time this has to be a debate and you have to get that money from him. If there are 1,000 flats, it becomes even more complex. And you have to implement it in a very different format. Notifications, WhatsApp groups, circulars, continuous maintenance. There are selfless service done by these treasurers and secretaries who have, they have no other job, but they're focusing on this and trying to get something good for the association. And all this money is flowed back only into maintenance. So ideally, if I had a role to play in change the law, I would simply knock these associations out of the GST because it doesn't make sense in taxing them.
Thank you very much, sir. That was again a very useful piece of information. So we have another practical difficulty which many SMEs are facing. One of them says that when we try to collect GST from our customers on our invoice, they ask us for proof for GST payment. What would be your solution to them?
No, they're not supposed to ask that, first of all, but many are asking because of past behavior and the fact that your ITC credit in the hands of the buyer is linked with the GSTR1 filed by the SSE. So long as a supplier has filed off the GSTR1 and the GSTR3B, that should be adequate proof that you are complied with the law. And your past history of tax payment should also show as a proof. If in the month of September you have paid taxes and you have raised in the invoice in the month of October, then that should be adequate proof to the buyer to show that this fellow is not a truant player, he is a compliant player. Because it's a never-ending chain. This person will insist that you pay. This person will say, unless you give me money, I can't pay. So it's like, you keep on, you don't go anywhere.
Understood. Thank you very much, sir. So we've got another question which says, can taxable supply to a GST exempt foundation, for example, NSDC affiliated educational institution, be allowed for input credit by the educational institution?
See, once you are saying that the educational institution is not in the ambit of tax and they are in the scenario where they say that I'm not liable to GST, then the procurements on which they have GST will be a cost. It will just accumulate it will become part of cost. Same in the case of hospitals or schools, because if you're an exempt service, you can't avail input tax credit and therefore whatever the GST charge becomes your cost. So in that sense, your cost increases on all your procurements. But the alternative is not good because you want to tax the institution which is running a charitable activity, or you want to tax a hospital which is providing healthcare service for the sake of the credit, might end up, fleecing that entire segment in terms of taxes. So if you're an exempt segment, be clear, there is no ITC. You cannot avail ITC.
Noted, sir. Thank you very much, sir. So we have another question which says, will this pandemic qualify as a force majeure event? Whether or not the lease agreements that have a can have a force majeure clause, and can we deny payment of commercial rentals to lessors as the lessee has not accessed the facility?
See, I'll take some time. I'll explain two concepts. One is what is called as doctrine of impossibility or doctrine of frustration. The Contract Act through Section 56 provides for it. Plus, there are also decisions in the context of what is frustration. I'll give you two English case laws to understand. Not naming the case law, but I'll just show you the facts so that you'll understand what is impossible. One fellow hired an auditorium in UK where there was a concert to be held. And unfortunately, there was a fire accident that the auditorium was completely engulfed in fire. And therefore, the concert could not take place. So the person refused to pay. The court accepted this, saying that the existence of an auditorium is an implied condition, and therefore the frustration has happened. This is one. Then there's an interesting story in London where you have this Kingston Street. So in Kingston Street, there was a situation where there was in England, you have this concept that if there are buildings which are very aged, there is a legislation which protects it, whereby you can't demolish it, you can't do reconstruction, you have to protect that particular piece of architecture. So there was one particular building which was identified like that, and it was in a dangerous condition. Therefore, all kinds of scaling up and walling up was happening. But still, there was a risk. So the local authority decided to block their entire road. And because of that blocking, they could protect this particular monument or building. In the same road, there was another warehouse who, because of the blocking of the entire street, lost business. And therefore, he said that my warehouse is not activated at all because of this locking of the streets. I'm not able to get business, and therefore I will not pay rent. The blocking was for nearly 20 months. The English court said that 20 months in a 5-year lease is a very longer period of lease is a very short time. It is only an inability to carry on business. It is not as if it is frustrated. You have to still pay the rent. Now, these are two English case laws. India also, you have a number of case laws, but I would look at it only from one perspective. Look at your rental agreement and see if there is a force majeure clause. In most cases, big leases, force majeure clause will be there. Force majeure would mean, typically they would have worded as act of God, war, riots, etc., or something beyond your control. A pandemic would definitely qualify as a force majeure based on the language that is used. In fact, I have drafted certain contracts in the earlier. In fact, I was curious, so I checked my earlier agreements. In some agreements, I have put the word epidemic. I have not put the word pandemic, but epidemic is found in some of these clauses. But as we grow, we understood war, we put war. We understood riots, we put riots. We understood disruption, we put disruption. After the Chennai floods, we put floods. After the cyclone, we put cyclone. So each time some danger happens, the force majeure clause gets expanded. So if there is a force majeure clause, the scope would be confined to the force majeure clause. So at best, you can look at the force majeure clause and seek some kind of suspension of the rental payment through negotiation with your landlord. You cannot straight away terminate saying that the contract is void because the object is lost. Your ability to pay can still be found out from some other mechanism. But the closure of the outlet, the closure of the mall can give you some kind of leeway to argue that it affects my ability to pay also. Again, it's a matter of debate. There are landlords who have voluntarily offered some kind of relief in terms of suspension. There are others who have taken position saying that I cannot give you relief because I'm also in trouble. So the force majeure clause becomes very, very important. So what is the force majeure clause in your contract that has to be interpreted? This is not only confined to rental, it can go to construction, it can go to any other contract where you have a force majeure. If a force majeure clause does not exist in your contract or does not exist in your agreement, then you have to look at the scope of Section 56 of the Contract Act. Section 56 of the Contract Act gives you certain rights to say that this entire purpose of the transaction has collapsed. There is no way the object of the transaction can be consummated because of this pandemic. And therefore, I would like to cancel the contract by treating it as void. Whether you're allowed to do that is an interpretation in terms of 56. But if you're having a force majeure clause, I would say please go back and read those clauses, and wherever possible, on a friendly note, try to negotiate with your owners or your landlords and see what relief you can get, because this is the time when both parties are aware of what kind of problem it is going through. Rather than taking a very, as a lawyer, I'm saying something which might can affect my profession itself. But initially, conversations can help. Initially, your discussions can provide much better results than straightaway litigation. But if a force majeure clause is good and it covers this kind of a situation like an epidemic or a pandemic or an act of God or something beyond your control, then read the clause quickly. It will also say this force majeure clause can be accepted provided you issue a notice within so and so period of time. So force majeure has been declared, is there in the contract, and the epidemic the pandemic has been announced, and your agreement says you must issue a notice in 3 weeks' time. Please issue that notice, because without issuing that notice or meeting that condition precedent for force majeure, you cannot invoke that clause later. So you have to be aware of the scope of the entire force majeure clause and look at it. As I said, if there is no force majeure, then we have to see whether the contract has become impossible. In my view, a rental agreement does not by itself become impossible. At best, your ability to pay has been slightly affected and derailed. What is impossible is a matter of debate in courts, and impossible sometimes cannot mean that it is difficult to perform. Or take the case of the old days when Suez Canal was closed during wartime. During wartime, Suez Canal was closed, and therefore one of the shipping companies said that I'm not able to deliver the groundnuts because the shipping canal is closed. The court said that yes, Suez Canal is closed. You could have taken an alternative route. There is another method available through which you could have complied. So your ability to pay the rent by itself may not be a reason. But if you're able to bring in other reasons, like I cannot carry on business for these reasons. These are the government orders which prohibited me from stepping out. These are the reasons why the malls were closed completely. I could not activate my outlets at all, and I'm prohibited from doing any kind of business. I'm not in essential goods or essential services, and therefore these reasons affected my sales, my revenue, and therefore I have an inability to pay, and that can somehow fit into the force majeure clause, or in the absence of a clause in section 56 interpretation, then you may have a point to canvass with your owners. Otherwise, it can be a matter of litigation between the parties. And in my view, this COVID-19 would explode litigation, because on both sides, one person may say, I don't want to pay because I have a problem. On another side, he says, my buyer is not paying because he's got a problem. So you may have problems both sides. So how do you deal with it? So COVID-19 is likely to open up a litigation in terms of contract disputes. And if there is an arbitration clause, the matter has to go to arbitration. So arbitration is also likely to increase in terms of this. So the contractual related disputes are going to be significant. Decisions will come from all over. There is already a Hong Kong judgment in the context of SARS, where one person said, I'm locked down days, therefore I cannot pay the rent. The court refused to accept, saying 10 days, nothing, so many year lease. So you have to also see the period of lockdown, the impact of it, how it is eased out, whether it is eased out fully or not. So many factors come into play. But I'm not saying there's no relief. There is relief based on your transaction documents and the interpretation of the statute.
Thank you, Ahmed sir. A related question is, what if there's no force majeure clause in the contracts?
Then we'll have to see whether the entire thing has become impossible. For example, let us say you have a construction contract.
Sorry, we've lost you, sir.
Sorry, if let us say if you have a construction contract, and this construction contract is for something.
Hello.
Hello. Can you hear me?
Sorry, sir, we lost you.
Now can you hear me?
For a few seconds. So just repeat. Yeah, we can hear you.
See, if you don't have a force majeure contract, we'll have to look at section 56 of the Contract Act. We have to look at section 32 of the Contract Act, which is contingent contracts. So where the object of the contract has completely collapsed, if the entire purpose of the substratum of the contract has collapsed, is that the case in the case of a rental? My answer would be no. The object is not collapsed, because after things get over, if normalcy comes, you'll come back. You'll be able to operate your businesses. You will start making your sales again. So in the absence of a force majeure clause, it cannot be easy. And if you look at Transfer Property Act, they talk about also the destruction of the property rather than the inability to use the property. Whereas if your other contracts are there where the objective is something which will completely collapse and the objective is no longer relevant in a post-COVID scenario, then the parties would definitely say that the reason why we agreed itself is no longer relevant, and therefore the contract has become void. So it depends on which business are you in, what element of COVID has affected you, whether the COVID is the only reason for why you're looking at the breach of the contract, whether there is already another breach come by the other party, whether that cause has got an impact. There are so many factors which will have to be gone.
Perfect, sir. Thank you very much, sir. So we have another question, which is more to do with EOU. The question is, 100% EOU allowed import of raw material without payment of duty. Again, 100% EOU is allowed to sell certain percentage of product in DTA. Recently, they have received an email from customers and who is asking them to pay the duties on raw material used for DTA. They want to know if that is a correct requirement from the customers.
See, if they are imported raw materials as an EOU and they have availed the relevant customs notification, which provides for an exemption for an EOU, they are fine. But if that notification is riddled with conditions that you cannot have other benefits flowing with it, and if you have other benefits flowing with it, then you are supposed to pay the IGST on the imports, then you may have a problem. So you need to, it's a very, very factual question. I need to look at specifics in terms of the nature of the business, the terms of the license, the notification which they originally claimed the exemption, the amendments made to the notification, and the nature of the email that has come. So honestly, I won't be able to give a general answer. This may require a detailed scrutiny of the entire transaction.
Noted, sir. Thank you very much. So another question is, can you please speak about how actually to pay GST on advances, how to track the taxes when our client has a balance amount to pay, but he has paid advance for services?
Well, this is a very peculiar irony. As far as the definition of supply is concerned, it talks about provided or agreed to be provided. Thereby, advances also come into the ambit of GST. Fair enough. But in the pre-GST era, if you look at it, excise law never contemplated excise duty on advances. VAT law did not have a VAT on advances. Service tax law had a service tax on advances. So with that kind of legacy, the GST law got amended by saying that advances for goods would be exempted, advances for services would be taxed. So I get money for as an advance, 10% I get an advance. I'm supposed to pay GST on it. Now, after paying GST on that, later on I raise an invoice when the transaction is consummated, and I adjust the advance against that and raise a proper invoice and pay the balance of taxes as applicable. Now, where does the problem come? The problem comes when an advance is received and I've raised an invoice in the respect of the transaction, assuming it's a continuous supply, and the transaction is cancelled by the customer. Now, the question is whether I can adjust the tax already paid against some other tax payable. So again, without going into interpretation, I always have two views. One is a simplistic view for when I'm addressing a webinar or an audience where you can focus on the statute and take relief from that. The other is an interpretation view, which is based on advisory, and some degree of litigation is always there. A simplistic view would be to look at section 34 of the CGST Act. 34 says when and under what circumstances you have to issue a credit note. So you have to issue a credit note. There are time limits by which you have to issue a credit note. Based on the time limits, if you issue the credit note, the tax which you have already paid based on the invoice raised can be adjusted against your subsequent tax liability. So you need to look at the scope of 34.1 and 34.2 of the CGST Act and then take the relief from it. But if you have just issued a receipt voucher and there is an excess payment of tax, then you can qualify for refund of the tax paid earlier. And there is a recent circular about 3 days ago, which also explains as to how you can take the refund.
Understood, sir. Thank you very much, sir. So there's another question where from one of them from the audience wants to know if revenue up to 1.5 crores, whether there is interest or not.
Excellent question. In fact, we always assume that the thresholds are higher for businesses. If you are in a turnover up to 1.5 crores, there is no interest at all for your payment of duty, for payment of GST. I think it's up to 29th June for a particular period, February, March, and April. You are allowed that liberty of filing a return by that date, and you don't have to pay interest. For the period, for people who are above 5 crore category, is the one which I talked about in terms of. Can you hear me? Yeah, for a period, for the persons who are less than 1.5 crores, there is a complete waiver of interest. But for people who are in the more than 5 crore bracket, then there is an impact, which I talked about earlier, where up to 15 days grace period is provided, and after 15 days period, you have a 9% interest.
Very important, sir. Thank you very much for that, because a lot of companies will definitely benefit from that knowledge. There's a question from a real estate player wherein they say that for some real estate companies, ITC isn't available. It affects my other parts of business like marketing expenses, etc. Let's say marketing expenses 20% of the overall cost. What would you advise to minimize, eliminate GST on marketing expenses?
See, this is a real estate player who's under the 5% bracket. If he is paying 5% GST, the notification says you cannot avail input tax credit. Therefore, he's stuck in terms of all his procurements because he's under that notification. There are tax planning opportunities in terms of interpretation, but assuming you go under the 5% category, the law is very clear that you are not entitled to credit. So one way is to minimize his procurements from, let us say he's procuring from service providers. If he's able to pick from service providers who are falling under a special scheme where they charge a lower rate of 6% up to 50 lakhs of business, then his GST bill comes at 6% instead of 18%. So he can minimize the impact of the GST that he receives, but beyond that, there is not much of scope.
No,
just a second.
Sorry, so we've got another question where we talk about one of our vendors is telling us that he has paid GST amount, but our auditor says that he has not filed the GST one. How do we find that out, and how do we deal with the situation?
If you have paid the GST amount, you have paid through your challan and your GSTR 3B, and GSTR 1 only reflects the transactions. So the proof of payment of tax is through your GSTR 3B and the challan. That can be linked, and that should take care of it.
Thank you very much. So there's another question that says we've made some salt exempted under GST, supplies to EOU for the financial year 18-19. We missed out to claim ITC for GST paid on packaging material. Can we claim now in annual returns?
So let me give you this answer, which is litigation prone. Very clearly, let me preface it by saying it's litigation prone. The law contemplates a time limit. Section 16(4) of the CGST Act talks about a time limit, where it says that you must avail your input tax credit, and the outer limit is identified as the due date for the return for the month of September. So let us say that your 18-19 related invoices you have not filed, you have not claimed in the September 2019. That is October 20th due date. You have not claimed it. So one view is that yes, I've lost my credit based on this. One interpretation possibly is to argue that Section 16(4) refers to a return which is in the nature of GSTR 3, and GSTR 3 is yet implemented. It has been kept in abeyance. The amendments in the rules retrospectively done are not adequate enough to cover this. Therefore, I still have time to file my return claim. Of course, this is a pure litigation-oriented methodology. You may even have to file a petition questioning the rule, which has amended the law retrospectively by saying that without amending Section 16(4), you cannot amend the relevant rule. So unless these stakes are significant and you are willing to take the litigation route, you have to go by the strict time limits. And if the amounts are not significant, I would say let's not waste time.
Noted, sir. Thank you very much for that. We have another question where the question is a refund of tax paid and supplies made to SEZ units or developers with payment of tax. One of these supporting documents asks for self-certified copies of invoices which are not found in GSTR 2A but entered in Annexure B. What is the point of GSTR 2A when I am applying for refund of invoices I mentioned in GSTR 1? Can you please explain what is the role of GSTR 2A here? So it's just a repeat of that. When I apply for refund.
See, I have a feeling that we have gone overboard in this GSTR 2A business. When I say we, even the, to some extent, professionals as well as government have gone overboard in implementation of GSTR 2A. What did the original system was, we had this matching of input tax credit. And because the system had its problems, we had to keep GSTR 2 in abeyance. GSTR 2 is a very critical return which talks about your purchases. So in the absence of 2 and 3 from the system, only keeping GSTR 2A doesn't make sense. So comparing this GSTR 2A and GSTR 3B itself, in my view, is questionable, but that is being done. And for practical reasons, companies have also accepted this, because in a way it also cleans up your supplier profile and ensure that you have a decent compliant set of suppliers. But many items need not fall place in your GSTR 2A. For example, let us take the same company. They may import goods. When they import goods, they file bill of entry and they pay customs duty. When they pay customs duty, they also pay IGST on the imports. Now, there is no invoice for that. That invoice, there is no GSTR 1 for that. Therefore, that won't come in GSTR 2A, but you will claim in your GSTR 3B. Similarly, you pay RCM. When you pay a reverse charge mechanism, you are supposed to raise a self-invoice. If you raise a self-invoice, there is no supplier raising an invoice and filing GSTR 1. Therefore, it won't come in GSTR 2A. And therefore, there are many items which may not fall in your GSTR 2A, but you're claiming in your GSTR 3B. That being the case, we should take this 2A with some element of pinch of salt and confine it to transactions where there are vendors who file returns, and not link it to scenarios where you raise self-invoices.
Thank you very much, sir. Very useful. Thank you. And there's again, even the cost of repetition. Many SMEs will have this query. How long input credit can be carried over?
Once you avail the credit, once you are eligible to claim the credit, and by the time frame you avail your credit, that is permanently available to you till you set it off. Whether it is useful or not is another question. For example, you may have 1.25 crores sitting as input tax credit, and you may have a monthly GST liability of 5 lakhs. Forever, you'll be using your credit. Now, this credit is not encashable. This credit is not an asset for funding from banks. Therefore, it will remain as a balance in your books. It will be an asset. It will be ITC available, but it is of no use. But if you are in a growing business where there is significant credit, for example, if you are setting up a new factory or you are setting up a new business, or somebody asked the question, and you have availed significant credit and your business is going to grow over the first few years, you will enjoy this credit as much as possible because you're able to set off. But in case you're only carrying forward at a point of time, at some point your auditors might say, look, I don't see you utilizing this ITC in the near future. Why don't you reverse it? So that question from an accounting perspective can always come. But there is no prohibition in carry forward of your ITC. The law does not in any manner. You can simply file returns and continue the balance.
Thank you very much, sir. Very useful. We have a question from an exporter who has a turnover of 40 crores plus. They have an accumulated GST ITC of 50 lakhs, and they've accumulated it over a period of time. Now, they say that the accumulation was due to CapEx machinery for manufacturing for the purpose of export. Is there any provision to get refund of the accumulated ITC, which is blocking their working capital, and they are incurring additional interest cost on it? If there is no provision for a refund, they would like to know if there is a way to litigate.
I've already filed writ petition on this point because the section 54, which deals with the refund, refers to unutilized input tax credit. And input tax credit would cover GST in respect of inputs, capital goods, as well as input services. There is no distinction as far as unutilized input tax credit is concerned. But when it comes to the formula through the rules which calculates the refund, the capital goods is left out in the formula. So because of the formula not having capital goods, you are not able to claim the refund in terms of the capital goods, even though the capital goods contribute to the exports. So we have filed writ petitions for certain clients before the Madras High Court. Matters also pending Gujarat High Court and Bombay High Court, questioning the rule which goes against a section, because when the section gives full relief, the rule cannot dilute it and say that it is not available in capital goods. So the only route is to file a writ petition questioning this mechanism of not keeping this capital goods in the ambit of the formula and arguing that the rule goes against the section. Rule cannot go against a section is the legal principle.
Thank you very much, sir. We have one more. We have a couple of more questions before we end up our day today. We have made supply of goods on August 19 to one of my buyers. We have not received the payment again to invest till now, but we have paid the tax. buyer is not operating his business due to bank problems. Is there a way to reverse the tax amount? And what are the legal ways to get the payment? That's a question from one of our audience.
See, if you have exported goods and you have paid IGST on that export, you should be entitled to refund of the IGST paid because you're an exporter. Because the law has changed only now. See, 2 weeks ago, or not 2 weeks ago, before COVID, before 10 days before COVID, the rules were amended, whereby they brought a new condition saying that even for export, the LUT must specify that you will receive the convertible foreign exchange within the time prescribed under RBI or such extended period of time. That is also only for LUT. But if you're a normal exporter not going under LUT and you have chosen to pay the IGST, the only condition is that goods must have been exported. If the goods have left the country and you have the let export order from the department on the customs document, that is adequate proof that the goods have left the country, and therefore you should qualify for refund. You will qualify for IGST refund which is paid on the exports. Now, going back to the fact that the buyer is not paying you the money and you are not able to realize that money, FEMA allows certain scenarios where you have to explain as to why you're not able to realize, because you will get a notice from Reserve Bank at some from an authorized dealer at some point of time as to why you have not realized the foreign exchange. So either you have to go for extension in terms of time to realize the foreign exchange, or you have to give convincing reasons for why you may have to write off. There are circulars available from RBI as to what are the conditions through which write-off would also be permitted.
Thank you very much, sir. Very useful. Now we have a question on one of the participants is we are 100% EOU under EHTP and are allowed to import raw material as long as positive NFE. So I'm sorry, there's no question here. I don't know where they missed the question. This is a piece of information. So I'll move on to the next question. Another person in the audience says we are running an iron and steel foundry and we export. We need a pattern to cast. Pattern will be done by ourselves and we keep it in our premises. We then invoice them. Whether we can take ITC on the goods used to make that pattern.
See, let's look at the transaction. You have been engaged by a foreign company to export certain materials which you are going to make. And the foreign company is also saying to make the material, you need a pattern. And the foreign company probably also specified what kind of pattern is required, what kind of strength is required, what kind of end use is there, what kind of endurance is required for the material that you're using. So all kinds of stipulations might have come. So based on that, you make the pattern. And to make the pattern, you have bought various raw materials on which goods have, and on which GST has been paid. Therefore, very clearly, you are able to establish an access to business. Without buying the materials, you cannot make the pattern. Without making the pattern, you cannot manufacture the commodities. Without using the pattern for manufacturing the commodities, you cannot comply with your export order. Therefore, the nexus to business, the use to business is very much established. So whatever GST you paid on your materials or services to make the pattern will qualify as ITC.
Thank you very much, sir. So we have one more question. We'll take one more question before we end our session. So there's a question which says, we supply services to SEZ registered companies and we raise invoice with NIM rated GST. When we file GSTR, should we choose 0 rated or exempted?
Any supply to SEZ is 0 rated. So you should call it as 0 rated, but ensure that you comply with the rule condition, which also says that the service must be used for the authorized operation of SEZ. Even though the section doesn't say so, the rule says so. So you may have to check that angle along with it. This is like the old service tax regime.
Sir, I'll add to that question. So in a case like this where someone's supplying to SEZ units, should they actually, even if it is a single customer, would it be preferable to get an LUT and then that will help their working capital? Or should they simply claim a refund or use the IGST paid portion of it as ITC next month and keep claiming it month on month as ITC?
It depends largely on the other businesses that they do and how much of their ITC is required. LUT is definitely a better option because it gives simplicity in terms of operations. And now the CGST rules are also quite clear as to what kind of invoice has to be raised for an SEZ, what kind of documentation requirements are there, what kind of entries must be specified. Even for an exporter, please be one important question that you asked. Even for an exporter, please be aware that your invoice must specify certain things as per the rules. Even when you're claiming that I'm going to use an LUT and I'm exporting services, Many companies simply believe that an email is enough. I'm getting money from abroad, I'm getting in dollars. What is the problem? There will still be a problem when you ask for a refund because they won't ask for an invoice. So please ensure that you raise an invoice as per the statute, as per the requirements in the statute. The statute also goes to the extent of saying what is the legend that should be described in the export invoice. Please go through all that. The family of Rule 96, 96A, all of them are there. Please read them or take an advice from somebody and ensure that you implement those kind of invoices. Similarly, for SCZ, please ensure that you comply with the requirement of the nomenclature of that particular invoice.
Noted, sir. And how easy or tough is it to get an LUT?
LUT is easy. It's your undertaking. You are giving an undertaking.
So one more question we have is, before GST supply from 100% EOU to defense forces considered as deemed export, after GST, what is the status of deemed export?
See, there is no concept of deemed export, but some notifications were restored back. Like what was used to be notification 10/97 and Central Excise, they got restored back in some form. So you will have to see the exemption notifications which have been issued. And if it is goods, you will have to look at 2/2017. If it is services, you have to look at 12/2017, and then see whether the exemption notification covers this kind of scenario. If it covers, then you are eligible to claim. Otherwise, no.
Thank you very much, sir. And before we end today's session, I'm sure during this COVID times, a lot of entrepreneurs might have walked into you, called you and asked for suggestions on how to continue business maintenance under this tough scenario. Any responses or any advices for our audience?
See, it's I've met a lot of clients. We had a lot of discussions, and the range of clients has been from the smallest of clients to the biggest of clients. And let me tell you, the problem is the same for everybody. It's just a scale that is different. So it is not as if a bigger company is insulated compared to a smaller company. All of them are in trouble in different forms. So the bigger you are, the bigger the problem. So what kind of discussions we've had is, it's largely around, I sense a phenomenal optimism in many businesses where the questions are more as to what happens post lockdown. How do I start business? How do I activate business? It is not I've not come across companies which come and ask me, how do I avoid this contract? How do I get out of this problem? Or how do I get out of this contract? They're more looking at what kind of steps I should take to activate business. For example, let us say this lockdown gets relaxed from April 20th and you're in a spot where you're allowed to carry on some business. You have to be very, very careful to ensure that all the government laws are complied with. Please read every notification, every order issued by the center and the state and the local authorities on this. Do not violate even a single element of that order. It is a risk which you're exposing yourself and to your employee. Second, if they're implementing certain safeguards for your factory to open or your foundry to open, please follow those safeguards strictly. Because what can go wrong is, let us say they're allowing 20% employees to function of your total strength, and 20 people out of 100 people come into your factory and start working. You're happy because you've started working, the foundry starts running, the metals start working, the furnaces are active, and everybody's happy. But if one of them has got COVID positive, imagine the consequences. Therefore, you may have to be careful in implementing controls and systems even at the time of entrance itself, to ensure that you have taken all kinds of steps to prevent an untoward incident. Similarly, if there is social distancing advised in manufacture, you may have to relocate some of your units, etc., to ensure that it is happening. And before opening your location, you may have to do a massive disinfection to ensure that everything is in place. You may have to invest in safety gadgets, safety gloves, masks everywhere, sanitizers everywhere, to ensure that people are able to move with a lot more. The fear factor is huge. You have to deal with it from a fear factor, deal with it from a humane factor, deal with it from a psychological factor. Have a medical facility, have some kind of doctors available to ensure that some kind of assurance is there. Then slowly things will come back to normal. Because now the government has also ruled out a disinfection tunnel. They've passed an order saying that is not the best way to go about it. So how else can you go about it? You have to look at those options. So strictly and meticulously follow each and every government direction. Government has also relaxed in terms of passes. There are enough facilities available online to get those passes. If the employees are coming and they're willing, please go the extra mile to ensure that they get the passes. You may also have to visualize how to transport people. You may have to work out solutions with the government and the transport authorities as to how to bring those people, because public transport may still not be there. So how will they come? We'll have to look at what else will they need in terms of a risk perspective? You will have then to look at how to transport those goods. Would transport drivers be available even though lorries may come? So there are so many things that you get in. I would say slowly but steadily scale up. Do not jump, immediately into it to show that, you can do the capacity. And second thing is also look at your profile of the buyer. Your buyer's problem is also important for you. If your buyer is going to be in deeper trouble than you, then even if you produce, you may not pick up. And you will again get into a peculiar kind of a problem, which is different from COVID. You will get into stock, you'll get into cash flow, you'll get into further defaults. Therefore, understand the buyer's business, understand his risk, have conversations with the entire supply chain to so that everybody starts smoothly, and slowly and steadily you come out of this crisis.
Thank you very much, sir. Very useful. And I personally had a lot of learning in today's session. Thank you very much. And I'm sure our audience has benefited as well. And you've also answered all the questions for the day. Thank you very much for that. I thank you for your time on behalf of the audience, and have a great day, sir.
Thank you very much. Wonderful. Thank you.